Awesome. Let's start it. Hello, everyone. Hello, how are you doing, guys? Thank you for joining. I see you guys are dancing, so I kept the music going a little bit so you guys get in a mood for a good webinar. Um, what I have for you guys today is about traps and key levels, the two main question you guys asked. I know traps, a lot of people are struggling to find it, and also, well, key levels. Key levels, let's start with key levels. Key levels are very important no matter what are you trading, what setup are you trading, what instrument you're trading, whether it's commodities or currencies, or even cryptocurrency. Key levels play a big role on them. Why? Because um, big institution, hedge funds, or even banks, they don't really like to have a, I don't know, $75 trillion, 564,234,222. They don't want this. They want $75 trillion. And in order to be a round number for them, in order to have a, entry would be a round number, profits will be a round number. So in order to get that, they're most going to have their orders, their pending orders, or their basically where they enter is mostly on a key level. So right now I'm gonna show you 500 in here. This is 1.31500, but 507. Let me make it 500. Yeah. So this is the nearest key level that basically the trap was happening. The market completely reversed off this area. So I'm gonna show you now first the trap. The trap started from Thursday, and it got a little bigger or more trap in Friday. So this is the first trap zone. And I'm gonna explain why this is a trap zone. It's trap zone because market showed a reaction to it, and right after reaction, they showed another reaction next day, induced people, and then broke the level completely. So if you go back in history of this this zone, you will see, there you go, you will see that this was not first time that this zone was being played. Market showed reaction almost a month ago to this price, just for you, that after a month when price come back to this zone, they can trap you. They can trap retail trader. How? So you saw price couldn't break this area and went all the way up to 1.338, and then now it's back in 1.32, but oh look, price rejected this area, and then again price rejected this area. So this is where people start buying of these areas, you know and this supposedly fresh support and resistance, you can see, holds the price. And you can see how Friday, which is I think this is NFP. Yeah, this is trap for NFP. You can see how they basically came all the way up from this zone, induced people during London session, just like they're validating this zone, and this is going to continue. But what actually happened is that using news, they will open up a spread. They got all orders above here, trying to get profit off this support and this inducement. So let's say they they couldn't fool these investors by inducing them to the market, so they had a pending order around here, here, or anywhere around here, you know how NFP works. So all this order got activated and the market shift against them. Okay. And even if I'm wrong, and even if there was no order up above here, this zone I just draw and this black one, the fresh support and resistance, can validate what I'm saying. When market react to an area 3 times, seeing shows inducement, the new retail traders, the new retail traders would start buying. And this is not about new retail trader. All of them, even with experience, they're looking for moments like this to enter to the market. So whether by the risk management or whatever, they might not blow an account here, which you know a lot of them did, but they might not blow an account here, but they'll lose because they're trying to trade what mainstream media says. If it was good, then why 90% of people lose 90% of their accounts within 90 days, right? Where they start from Google, right? When they start from the $1,000 course that teach them how to draw support and resistance, trend line, Fibonacci, stuff like that. So when market react to a zone, right, that retail trader would be interested to commit, that's our trap zone. And we got another zone, which I personally call it, if in Forexia, we call it liquidity zone or liquidity pool. It's where market maker trap people, trap retail trader using the support and resistance zone. And this trap, if someone enter here, most likely their stop loss would be below this zone, and depending on what kind of trader they are, they can come and have the stop loss, below this zone or anywhere here. They see this maybe here, in the case of here, they survived, but it wasn't stop loss enough here, otherwise market would come down there. So if they stop here, means liquidity pool was around here. And how can you identify liquidity pool? Because trap zone, it basically reverse engineer of retail. When you reverse engineer retail trader, you find where they want to commit to trade, so you go opposite. All right. When you go against their direction, then means you're aiming for their stop loss. You're aiming for their stop loss. So all you have to do is you reverse engineer them in order to find where they're going to enter. So also reverse engineer them where they're going to have their stop losses. Super simple, super easy. So now retail trader have usually 30 to 50 people stop loss. 30 to 50 people stop loss. That's their usual stop loss. And I personally go for the, what I do is I find my trap zone. And then I know that 30 to 50 pip, that's a 50. 30 to 50 pip below the trap zone in terms of if it's a support, or above the trap zone if it's resistance, would be liquidity zone. But how I exactly know where to stop? That comes from key level. So I found my trap zone. I know 30, 50 around this area would be liquidity pool. And then all I gotta do is just check the price. Look right and check the price. What is the roundest number you can see? First is 750 around here. That if you take trade based on this M formation on NFP, and in case you survived by this stop hunt, then your take profit level was hit right at NFP. a little around like 2-3 candle after NFV, your take profit level would hit. But for me, I know 30 to 50. So when I see around 40 pip, we got 1.31500 at this level. This red one, I have it here. 1.31500 round number. So that's the take profit for us. The stop loss of retail trader is our take profit. And where they enter, we basically just enter the other side. That's it. Okay. So let me just drop this. Okay. So now, in case you guys want to know, the moving averages, it was DMA before. Now it's 1450, 200, and 800. Okay. So I'm not doing anything based on moving averages that you going to ask me about average. So pay attention to, let me just remove this one as well. We're not looking at moving averages to find liquidity or trap zone. Okay, we're looking at pure market, plain, just candles, and we're going to just see how retail trader look at the market. Now at this, if you don't have a note, guys, a pen, paper, you gotta have it because you need to write these things down. So trap zone will create a liquidity zone, and liquidity zone will be, so I know a lot of Academy and Unity and VIP students are here. I want to know what is the answer. Liquidity zone will be, anybody on chat? Come on, guys. No. No stop loss and buy and sell order. No, not created. Not filled with orders. It's kind of right. Not take profit. Retail traders stop loss. No, this is what you guys are saying. It's what is happening now. The liquidity zone is stop loss of retail trader. It is a take profit zone, but liquidity zone is created already. Later, this liquidity zone will be, nobody answered right, so I'm gonna just saying it, I'm just gonna write it, will be a trap zone by itself. Okay, so trap zone, let me explain it. We got a trap zone in here. Trap zone will create a liquidity zone here, and once they reach the liquidity zone, what they have to do is convert that liquidity zone into a trap zone. Liquidity zone will be a trap zone later. So this is what I mean by this. This is our liquidity pool. Price came, break it, trapped sellers right here on Monday, and then stop on them. Break it again in New York session Tuesday and stayed below the zone. Consolidation is the session that market maker will move slowly in a range, and what it does, trapping. Oh. What it does is trapping. Consolidation job is trapping people. Well, now you see why it's trapping people, because they created a liquidity zone. They hit the level. When they hit the level, retail trader will be like, oh, is it a fresh resistance or fresh support? One time, two time, break, retest, let's sell the downtrend. Ooh, I got to stop hunted. Why? You're going to call your mentor and be like, hey, the support was broken. I got the retest, or maybe if I draw it like this, there is a lot of people would enter here too, because it's touch of a trend line. You know, the support is broken, trend line is respected. If they draw some sort of Fibonacci, probably is respecting, and then they're going to sell the market. When they sell the market will stop hunt them. They got stopped out. So now it's time for what? Come back to the zone, trap sellers. How retail trader will commit to a sell again is when they break this zone and fail to come back up, right? So they stay a long time below this. Let me count the time for you. They spend around 12 hours below this zone, trapping people, making them sell lower low after lower low. You know, this is where they could sell. You see how trend is being respected right here? That's trap, guys. That's trap. You see how here is respected? That's trap as well. So what they do is they fake out, because nowadays retail traders are waiting for fake out too. I see them talking about it. So they wait for this fake out, which is if you only take M and W blindly, you will sell this as well. Okay. So retail trader they see the breakout, which is fake out, and then there is a break. They came back below the zone, respect the zone, closed below, right? And then shift back up. New York session does all the thing. The moment some of you might say, hey, it closed above right after. Yeah, but when you are behind a red light, if it's yellow or if it's red, you're just not doing anything. The moment you see the green, you go. And if after that, you know, a moment after green, it changed quickly, you know, in market, you basically committed already. You are in middle of intersection. When, you know, you see all this confirmation, you see all this confirmation for retail trader, this is another bearish confirmation for them, bearish candlestick confirmation. So when you see all this, let me just add this one too. If you put this as a fresh support resistance, you can see how well it was respected all this time, and even closed below again with a wick up above, telling them it's bearish, and what's happening is wick get filled, and 65 pip in a single day goes all the way back up. This was super obvious, you know, and the point is you could identify the trap zone, then predict the liquidity zone, trade that move to liquidity zone, and then you know it's going to trap people. Wait for your confirmation to buy when they sell, to buy here when they sell. Well, I'm gonna be honest with you guys, because I'm not the type of fake it until make it. In the same day here, I had a session with I had a webinar with Academy where I told them I want to see more trap down here, and then I see the upside. So then I only got this because I didn't enter by these confirmations. And the reason is you have to be updated with market all the time. And you have to wait. What I mean by updated is I updated myself every night, and I see trap day after, you know, more trap every day. And I see increasing traps in market maker works. So when I'm trying to catch a reversal, then I want to see a lot of traps. When I don't see those traps, I'm going to miss this. I'm going to miss this, and I have absolutely no problem missing it. Why? Because I got this, right? I got even more. It's a little longer. I know safe trade and safe risk is much better than just any type of other than risk. So I rather wait and see retail trader accounts going away, and then I just sit on the rest. This trade right here in this day was absolutely beautiful. We knew, you see, all this time from here to here, all this time, well, not Friday because I did traded it. Oh no, I didn't actually. All this time I basically was waiting. I was looking at the charts, I was looking at the market, but I was not trading it because it wasn't really clear to me what is market going to do. Obviously, I'm not going to sell when I see this downtrend like this, right? And then I'm not going to buy just because I see a big downtrend. I hope you guys can do this for yourself. Don't be so just like the retail trader. Just when you see downtrend, don't look for sell because it's a downtrend, and don't just buy because downtrend is obvious. I see a lot of you guys. I was there. That's why I'm saying I was there. I was every week coming to my chart, drawing, finding an obvious trend, trying to reverse it. But you have to get enough confirmation. You have to make sure dealer or market makers are making enough money for themselves before they give you profit. I'm going to show you another example would be AUD USD, I think. Let me find this guy, AUD USD. Yeah, that's another one that when we were speaking about it in webinar, we got already all these things here. We spoke about this zone, which is actually a round number. We talk about it that this pair can reverse all the time, all the way back to here. But notice where I have my, where I put my position. I wanted to see the shift. When you want to wait and see the shift for trap, then you're basically, how can I say it? Damn. When you wait for market maker to make that aggressive shift, that is the first shift, then you will save yourself from a lot of time trying to catch a sell and trying to catch reversal at the high of this day. Then you would be crazy. You would go crazy in this day. And then next day after it, they do exact same thing. You know, they keep coming up. They keep trapping retail trader for buy, but they're not even showing them any profit. So right now, I know it is going, oh, you see, it's right here. Let me just put this up. NZD USD did go down. Yeah, I know. And this is why I'm saying wait for that shift, because right now retail are stuck. This is the trap zone right now. I personally think right now sellers are being trapped a little bit. You know, this is more looks like a seller's trap to me. The only reason I'm not looking it as a seller's trap is this trend line respect. Trend line is so respected, so I kind of know it's gonna go down because a lot of retail are buying through this trend line retest, and market maker cannot have these retail trader on their tail, right? So they keep consolidating around here. I want to wait and see a shift, and the market will come back up to stop on people who jumped in the shift. And then that's where I start selling it. And that was my take profit. So this was a potential setup for me that still is, but did not happen in previous week. Okay. So don't go and try and start catching tops and bottom because I teach you how to find traps and liquidity zone. I personally don't take it from the top or the bottom. I take it as a safety trade. If you don't know safety trade, you have to watch the rest of video in YouTube. I explained it. There is one video exactly about safety trade. Safety trade basically is, I'm going to say quickly, when you find an obvious trend, you see, you find an obvious trend that going up, you find a trap zone and you basically realize that you are going to sell this, but you don't sell it. See, trap is found, shift against retail trader. You want to see that shift below them, and then there will be induction that will end to DMA. Well, it's not now gonna talk about it, but it's gonna end to DMA and then we enter. Basically, our entry is after shift and after induction. That's the safest way to go. The shift means shift in momentum, right? Well, it will happen to be same. When they shift this trend to down, obviously momentum will start showing bearish, so momentum also will change. Would you expect a fake W on the support zone and then turn into a valid M and break the support? Do you mean in AUD USD? AUD USD. Yeah, that's very possible. But if you see a fake W, that's why I said I can see it as a seller's trap as well. So you can see a W. Let me just delete some of them. I'm gonna keep this for my setup, but what you can see is that they come below, form a W setup, and then actually go for the liquidity created here from the sellers. We are the sellers. Forexia is selling AUD USD because it's an obvious downtrend, and we most likely will, if you give it to Dylan, if you give it to Elvin, if you give it to me, we, at least I know Brandon will just gonna go buy this still. But I think this is going to be a sell, but it's going to have a stop hunt, grab liquidity of sellers will equals to M formation and then make the move. So it's not fake W basically. It's that W that going for liquidity zone, and that shift to liquidity zone will add buyers to the market so market can sell. Is this for long-term trading? How long to watch out for this? On waiting for these traps to play out, can you still go on ahead and trade daily structure? Yes, these setups are, in the course of week, there is a personally, I would wait for Tuesday. I would wait for more consolidation, this move in Monday, and then a Tuesday reversal of the Monday's high, make the trap. Notice that this trend we are looking at it right now was created by a Tuesday reversal, and almost same thing, consolidation during the week, Monday consolidation, Tuesday trap, and all the way back up. I was explaining this to the academy too. You see, trap zone right here, trap zone, touch, 3 touch, 4 touch, 5, and then induce, stop hunt them, 25 pip. Why 25 pip in this case? It's because AUD USD has a really low ADR. So it came to 25-30 pip. It came there at this move to grab their liquidity was inducing sellers so they could buy. And I want to see a copy paste in here. Almost a copy paste in here. But if you want to take daily structure, what I recommend you is to have moving averages on your chart, right? And then wait for that shift. Same thing. Wait for that shift in Tuesday. Like, I mean, look for the trap, wait for the shift. And if trap is forming in this pair, let me finish it and then I continue. Wait for this shift to happen and then take any daily structure that is respecting your DMA. So your entry, sorry, EMA. So your entry would be here and all this up here, okay? This can be your entry, but since you ask about daily structure, this is not daily structure, but this is, right? So they stop on the low, came above averages, retested respectfully. You could buy 10 pip stop loss and eat the day. Monday, same thing. So you basically, in a day, in a course of day, you can go and find pairs that had the shift done, and then you're looking for daily structure. Let me see if I can find any like this. There you go. Too often. So you can see how market is in downtrend, right? So you are going to, you can see how averages are far from each other. The shift was, this was basically the shift, very slowly moved, but this shift to here and this last one was the cause of this average crossing down. So then all you wanted to do is find a daily structure, stop hunt high, respecting averages, and then you continue the ride. And all these days was opportunity for you to buy, sorry, to sell, my bad. If you couldn't find it in AUD USD, trust me, somewhere else it's happening. Daily structure is forming everywhere, every day, every week in different pairs. So you can literally just look for it and then get it. So this downtrend was 1, 2, 3, 4, 5, 6 days that you could take trades based on daily structure and win good as well. And if you couldn't find it, just look for another pair that giving you the same setup. I have around 2 minutes, guys. If you have any question, let me know. You all know where to find me. So if you're watching it on YouTube, make sure to click on the links, join our community academy, and level up. Is daily structure defined by stop hunt and then EMA retest? No, daily structure is defined by daily structure. No indicator, no EMA, nothing is involved. Let me just go here. Simple concept of problem, reaction, solution. You have market has 3 phases in a day. It's whether consolidating or breaking out, trapping people, or New York reversal. This is the factors for a daily structure. Okay. This is the one, this is the one, and this is the one. So you have your problem here. And then you got your reaction here. And then your solution. So market will trap people. Trust me, this is going to be right here. This is going to be a resistance, okay? Market create a problem down here and then break out. This break and retest will create a reaction from retail trader to enter, solution for dealer is hitting their stop loss. Vic fill, the last question. I hope I can finish it. Purpose for Vic fill is market willing to go to those prices, but is lack of liquidity. So they'll come back, trap people enough to go and fill that Vic, basically reach that price. Yeah. Thank you guys. Anytime it's going to cut. Thank you for joining. I hope you guys enjoy.